Today I want to talk about something every trader knows, every trader feels, and every trader struggles with. It's the pain of holding a trade, the emotional torture of waiting, and the mental skill that separates consistently profitable traders from everyone else. When you first enter a position, especially when the setup looks clean, it feels exciting. You're confident, you're ready, but the real battle doesn't happen at entry. It begins right after you place the trade. Your mind becomes noisy, your heart beats a little faster, and suddenly the chart seems to move slower than usual. This is the moment when psychology starts controlling everything. Your strategy gave you the entry, but your emotions decide whether you'll actually reach your take profit or not. Most traders don't lose because of bad strategies. They lose because they can't sit still. They can't hold. They can't wait. The fear of losing the unrealized profits becomes stronger than the desire to follow the plan. This is why so many trades close early. It's why so many traders sabotage themselves. Even when the chart is doing exactly what they predicted, fear pushes them to take small profits. And because they take small profits, they end up needing to win more trades just to break even. This is the beginning of the cycle that breaks so many accounts. But the truth is simple. Holding a position is painful because your mind hates uncertainty. Your brain is built to avoid discomfort, and holding a trade puts you into one of the most uncomfortable emotional states you can experience as a trader. Your brain wants relief. It wants you to close. It wants the tension to end. But here is the reality. Profitable traders are the ones who learn to stay inside discomfort. They become comfortable with being uncomfortable. They know that the chart doesn't care about their feelings. They know that time is part of the process. And they know that money is made not by entering trades, but by holding them long enough for the edge to play out. Every profitable trader has learned this one truth: small wins don't build accounts. Strong discipline does, and discipline is built inside the pain of holding. When you hold a position, especially a position that goes into drawdown before moving in your direction, your brain starts firing warning signals. Your mind says, "Close now. Save yourself. Don't let this become a loss." This is natural. This is your survival instinct. But trading is one of the few activities in the world where your survival instinct works against you. The part of your mind that wants to protect you is the same part that destroys your long-term profitability. This is why your emotions can't be the decision maker in your trading. They will always choose comfort over discipline, short-term relief over long-term growth, and tiny wins over meaningful progress. To become consistent, you have to learn what the market is really doing psychologically. The market rewards patience and punishes emotional reactions. This doesn't mean you should never close early. It means closing early must be part of a plan, not part of a panic. The moment you start closing early because of fear, you are no longer following a trading strategy. You are following your feelings. And your feelings are designed to protect your ego, not your account. Holding becomes especially painful when you are used to scalping. Scalping trains your brain for quick outcomes. It conditions you to expect immediate results. It teaches your nervous system that trades should finish fast. This creates an addiction to instant feedback. And once you're addicted to speed, holding a position for hours, or even minutes, feels like torture. This is the psychological trap of scalping. It shortens your emotional tolerance. It reinforces impatience. It makes you think that if a trade isn't instantly in profit, something is wrong. But in higher timeframes, uncertainty is normal. Drawdown is normal. Waiting is normal. You cannot rush a setup on the higher timeframes the same way you rush a scalper's candle. Many traders switch from scalping to swing trading because they want to reduce stress, but they carry their scalper mindset with them. They still want instant movement. They still want perfect entries that never pull back. They still want fast profits. This creates frustration, and frustration leads to more mistakes. The truth is that holding a single higher timeframe trade requires more emotional strength than taking dozens of scalps. That's why many scalpers never make real money. They don't have the psychological endurance to hold through normal price movements. Now think about this. How many times have you closed a trade early only to watch it hit your original TP after you exited? How many times have you taken 5 pips, 10 pips, or a small partial, just because you were afraid of losing what you already saw on the screen? How many times have you turned a winning trade into a break even because you were scared of giving it back? These are not technical problems. These are psychological patterns, and unless you break these patterns, no strategy can save you. The pain of holding is not a sign that you're doing something wrong. It's a sign that you are in the growth zone. The discomfort you feel is the same discomfort that builds discipline. Think of it like going to the gym. When you lift weights, your muscles feel pain. But that pain is what makes them grow. In trading, the emotional pain of holding is what makes your discipline grow. Every time you endure the discomfort without giving up, you are training your emotional muscle. You are strengthening your tolerance. You are becoming the version of yourself capable of earning bigger profits. But to hold effectively, you must trust your analysis. Trust doesn't mean hope. Trust means preparation. You trust your trade when you have a clear reason for entering it. You trust your stop loss because it is placed where the market should not go unless your idea is invalid. You trust your take profit because it aligns with structure, levels, or liquidity zones. When your plan makes sense, holding becomes easier because there is logic behind your expectation. Without logic, you rely on hope. And hope is the fastest way to blow an account. When traders say, "I don't trust my trades," what they really mean is, "I don't trust my analysis." And when they say, "I don't trust my analysis," what they really mean is, "I haven't practiced enough to be confident in my system." Confidence doesn't come from winning trades. It comes from understanding the market deeply. The more you understand market structure, liquidity, psychology, volume behavior, and entry timing, the easier it becomes to trust your setups. And once trust is built, holding becomes less painful. Most traders underestimate how long it actually takes for a setup to develop. They expect the market to move in their direction immediately. But the market doesn't respond to our impatience. It moves when it moves. It completes cycles. It hunts liquidity. It fills orders. It reacts to sessions. It respects volatility windows. Part of holding is accepting that timing is not fully in your control. You control your entry. You control your stop loss. You control your take profit. But you do not control when price decides to move. Accepting this brings peace. Fighting this creates stress. One of the biggest reasons traders close early is because they don't like watching their unrealized profits fluctuate. Seeing a trade go from $200 in profit down to $80 feels like a loss, even though you are still in profit. This is called emotional accounting. Your brain treats unrealized gains like they belong to you. So when the market pulls back, your mind interprets it as losing money. But in reality, nothing changed. You didn't lose anything. The trade is still active. It's still following structure. The fluctuation is part of the journey to your TP. The only time you actually lose is when your stop loss gets hit. Anything that happens before that is just noise. To overcome this, you have to stop watching your profits. You must watch the chart, not the money. The money is a distraction. The chart is the truth. When you focus on the chart, your emotions become calmer because your attention is on analysis, not on dollar signs. When you obsess over the profits, every small retracement feels like danger. But when you focus on the chart, every retracement feels like structure. And structure is predictable. Here's another painful truth. Most traders do not hold because they size too big. Over-leveraging amplifies fear. When your lot size is too large, your emotions become sensitive to every tiny movement in the market. A 5-pip pullback feels like a disaster. A small drawdown feels like a threat. You can't think clearly because your brain is in survival mode. The solution is simple. Lower your lot size. Trade a size that allows you to breathe. A size where you can sit through drawdown without panicking. A size that lets your analysis play out. Profitability comes from consistency, not from oversized positions. There is a moment in every trade when the market moves slowly. This is the moment that tests your patience the most. Many traders exit here because they mistake slow movement for reversal. But slow movement is just the market gathering orders. It's preparing for the next push. If your analysis is correct, this is not the moment to close. This is the moment to relax. Let the market do its job. When the push finally comes and price moves strongly in your direction, that is the reward for your patience. And that reward feels better than anything else in trading. The market will always test you before paying you. It may move slightly against you. It may consolidate. It may wick both sides to shake weak hands. These movements are designed to remove impatient traders. The market is engineered to move money from the emotional to the disciplined. If you want to be consistently profitable, you must become part of the disciplined group. And discipline is expressed through holding. Think about the times when you closed a trade early, only to watch the full move happen without you. How did that feel? You didn't just lose money, you lost opportunity. Opportunity loss is more painful than stop loss. Because stop loss means the trade was wrong. But opportunity loss means the trade was right, and you failed to take advantage of it. Holding protects you from opportunity loss. It allows you to finally capture the full potential of your trade ideas. Another mistake traders make is moving their stop loss too early. They think they are reducing risk, but they are actually increasing the chance of getting wicked out before the big move. A premature stop-loss move is often a sign of fear, not strategy. The best traders let the trade breathe. They move stop-loss only when the market shows a clear structural shift in their favor. Not before. Let's talk about regret, because regret is one of the most powerful emotions in trading. Regret comes from lack of discipline. A trader who follows their plan never feels regret because even if they lose, they know they executed correctly. Regret appears when you betray your own rules, when you close early, when you overtrade, when you revenge trade, when you let fear interfere. The pain of regret is worse than the pain of holding. It's heavier, it stays longer, so you must choose your pain. The pain of holding leads to growth. The pain of regret leads to emotional damage. Now let's talk about long-term thinking. Every trader wants fast money. This desire is what keeps them stuck. The traders who succeed are the ones who shift their expectation from quick gains to consistent growth. They stop trying to double accounts overnight. They stop trying to catch every move. They focus on quality trades, not quantity. And they give those quality trades the time they need to develop. This is the maturity phase of a trader. Without reaching this phase, you will always feel emotional pain, you will always exit too early, and you will always struggle with consistency. Every time you force the market, it punishes you. But every time you align with the market, it rewards you. Holding is alignment. Holding allows the market to move naturally. Holding respects structure, time, and flow. If you want to win big, you must allow the market to breathe. You must allow the trade to unfold. You must allow your analysis to prove itself. Let's talk about self-image. Your results will always match the belief you have about yourself as a trader. If you see yourself as someone who panics, you will panic. If you see yourself as someone who needs fast profits, you will behave impulsively. If you see yourself as someone who is inconsistent, you will create inconsistency. But if you begin to see yourself as someone disciplined, patient, calm, and strategic, your actions will match that identity. Holding is a reflection of self-image. A patient trader is not born. They are created through repeated exposure to discomfort. When you hold a trade successfully, even once, you build evidence that you are capable. That evidence grows, and as it grows, your confidence grows. This confidence removes fear, and when fear disappears, holding becomes natural. In the long run, the traders who master their minds will always outperform the traders who rely only on strategy. Now imagine your future self. Imagine being able to hold a trade calmly. Imagine seeing drawdown without stress. Imagine trusting your edge so much that you no longer watch the profits fluctuate every second. Imagine waiting for your TP to hit without doubt. This version of you exists. But you can only reach them by going through the uncomfortable stages first. Every professional trader was once impatient. Every professional trader struggled with holding. But they kept practicing. They kept showing up. They kept pushing through. Your job is not to avoid discomfort. Your job is to build tolerance. Every time you hold, even for an extra minute, you are training yourself. Every time you fight the urge to close early, you are becoming stronger. Every time you stick to your plan, you are building your identity. And identity is more powerful than motivation. Let's talk about emotional triggers. Every trader has certain triggers that make them exit early. For some, it's seeing price come close to stop loss. For others, it's seeing a temporary pullback. For others, it's hearing news coming. For some, it's seeing the dollar amount fluctuate. You must learn your triggers. When you know what triggers you, you can neutralize it. If watching profits triggers panic, minimize your chart window. If large lot sizes increase fear, reduce them. If noise from others affects your decisions, trade alone. If overthinking causes early exits, set alerts and walk away. You cannot eliminate emotions, but you can reduce the situations that trigger them. Now think about how many times your analysis was correct, but your patience was not. That gap between your vision and your actions is the reason your results don't match your intelligence. You are smart enough to trade well, but your emotions interrupt you. This is why psychology is the real trading skill. Technical analysis gets you into trades. Psychology gets you paid. Every strategy in the world works when you have discipline. Every strategy fails when you don't. The difference between a profitable system and a losing system is not the system itself, it's the trader. You are either the asset or the liability in your trading. You are either the reason the system works or the reason the system fails. Holding is proof that you trust your plan. Exiting early is proof that you trust your emotions more than your plan. This is the dividing line between amateurs and professionals. Professionals don't get lucky, they get patient. They don't chase trades, they wait. They don't overreact, they analyze. They don't panic, they stay calm. This mindset makes all the difference. You must also understand that the market does not punish patience. It punishes impulsiveness. The market will never take money from you because you waited. It will only take money if you act emotionally. Patience is free. Discipline is free. Following your plan is free. But the cost of impatience is huge. It is the reason your account doesn't grow the way it should. The best traders in the world talk about holding more than they talk about entries. Entries are easy. Anyone can enter a trade. But holding requires character. Holding requires strength. Holding requires emotional maturity. The market rewards maturity. It punishes childish reactions. You must decide which version of yourself is going to take the next trade. Now let's talk about the long-term transformation that comes from mastering the pain of holding. Over time, as you develop emotional strength, something beautiful happens. Holding stops feeling painful. It starts feeling normal. It starts feeling calm. It starts feeling logical. You begin to see the market differently. You stop reacting to every small move. You stop being controlled by fear. You stop rushing. You begin to trust the process. When holding becomes natural, you enter the advanced stage of trading. This is the stage where you let your winners run, where you catch bigger moves, where you grow accounts consistently. This is the stage where your mindset becomes your advantage. And once you reach this stage, everything becomes easier. You trade less but make more. You wait longer but earn bigger. You risk less but gain more. This is the reward for mastering the pain of holding. But remember this. Your journey will not be perfect. You will still close trades early sometimes. You will still feel emotions. You will still face doubt. But each time, you get better. Each time, you hold longer. Each time, you learn something new about yourself. Success is not a straight line. It's a staircase. And holding is one of the steps. The only way to truly grow as a trader is to face the emotional challenges that come with trading. Avoiding them will keep you stuck. Embracing them will move you forward. Holding teaches patience. Patience teaches discipline. Discipline teaches consistency. And consistency is what builds accounts. So the next time you enter a trade, remind yourself, the discomfort you feel is part of the journey. The fear you feel is normal. The temptation to close early is normal. But winning requires you to overcome these feelings, not obey them. You are not your emotions. You are the master of your decisions. If you commit to holding, you commit to becoming the trader you were meant to be. The pain of holding is temporary. The reward is long-term. Let the market do its job. Let your setup play out. Trust your analysis. Trust your plan. Trust yourself. Because the trader who learns to hold becomes the trader who finally becomes profitable.